What are the big risks still at play? Because it doesn't feel as though necessarily that the offensive moves that we have seen in the Middle East have necessarily changed things.
Yes, I think that's the key word is range bound because the market has had a really hard time over, I would say, the course of this year, really assessing what the geopolitical risk premium should be to be assessed for the two-pronged wars we currently have, the Russia-Ukraine war and also the Middle East tensions with Israel-Hamas. And then you also mentioned on the demand side with China. Both of these issues are creating a little bit of a tug of war, I'd say that's basically balancing oil prices over the course of this year. And that's why there really hasn't been much of a pattern or traction. I would say the hardest one has been assessing the geopolitical risk premium because, as you just stated in the recent news update, a lot of these developments are very fluid and ongoing, but can have a very big risk on oil prices. My opinion on this, though, is I think as we start to get more clarity on whether we're going to have a soft landing or not, and also how prolonged that these wars are going to be and whether any progress is going to be made, that's where you're going to start seeing the market get a better footing with oil prices.
Rohan, Dan here. Expand on that for me. What are the price scenarios that you're working with right now? In the scenario that the ceasefire talks fail or we don't see progress, what happens to the price of oil now sub 80 USD? Could we see a spike?
That's the million-dollar question here, because I think there's a few scenarios where you could see a wide spike in oil prices. Just at a high level, OPEC makes up about a third of global oil production when you factor in all the members. So it has a very material impact. And at the same time, we kind of see a lid being placed on some of the non-OPEC producers like the US and how much more that they can ramp up production. So this puts a lot of pressure to make up any potential shortfalls to come from a lot of these Middle Eastern countries that could be right in the throes of basically what could happen with the Israel-Hamas war. In our view, I think there's a couple scenarios. If this escalates into some sort of a wider regional conflict where you start seeing more players drawn in, and also, I think more importantly, if you start seeing ports get shut down or major infrastructure lines get shut down or disrupted, then you could see $10, $15 price spikes in oil getting up to, closer to that $90, $95 price level of oil. But if this remains relatively contained, I do think that's where you're going to continue seeing maybe small moves upward in oil prices, maybe only $5, $10. And then the unknown factor here, right, is if we start seeing some kind of a decline in economic data globally, whether it comes from China, whether it comes from other parts of Western countries. So both of these factors are really having major implications on oil prices.